Hello and welcome to the third episode of Intimate Investing. To begin with, we're going to have a look at the portfolio breakdown and compare it to the breakdown of the last week. So beginning with finance. Finance had been reduced from 41.7% to 38.4%, which is a reduction of 3.3%. Energy had been reduced from 35.1% to 33.3%, which is a reduction of 1.8%. The other section, which is made up of my ETFs, has been increased by 3% from 9.5% to 12.5%. Tech has been increased by 1.6% from 8.1% to 9.7%. Mining has remained the same despite having no further allocations. This is just due to the share prices increasing. And telecommunications has increased by 0.1%. That's primarily from the share price increasing, but there was a small allocation also. And there's also a new section which is cars, and that's due to an investment I made with Uber. Very, very small investment, although good for the diversification. I am hopeful for Uber. So if I'd made this video as I'd planned to last weekend, it's now the Monday, this would have been down by about £100. I mean, the end of last week there was quite a bearish sentiment and everything was sort of going down, more so the UK stocks rather than the US stocks, although they have rebounded now on the Monday. So I'd actually wish I'd sort of made that video on the Friday. It would have given a far better insight into how the portfolio was doing, although I didn't have time this weekend. I got back from work late and it is what it is. I wish I'd sort of had the documentation of it and I made a video, but I'll learn from the future. I'll try and ensure that I stick to my time schedules in the future. So beginning with Aviva. I've increased my position with Aviva from 211 shares to 215 shares. The average price I managed to get down from £2.50.2 pence to £2.49.8 pence. Now this one actually dropped by about 10%, and I really, really wish I'd had sort of some funds on standby that I could have allocated it to it during this dip. I mean, it's the same for all the UK stocks. I mean, they all dipped considerably, and I didn't really I wasn't in a position to add to them significantly and to drive their average price down. So I think that's something I'm going to take into account going forward, and I think I probably will prepare for that eventuality and sort of have a stash of funds, or not so much a stash, but a significant amount of funds at hand for when there are dips in the market, and I can see that opportunity for averaging my share price down significantly. So the end of last week it was down by 1.33%. Aviva's now down by 3.27%. So I mean, it's doing slightly worse, but as I said, there was a massive dip at the end of last week. It ended up being down by about 9-10%. So actually is rebounding now. That 3.27% is down. It is getting slightly better. We can have a look at the chart, and yeah, as you can see, it has been sort of making the gains again. But I do wish I'd had the money. I mean, it got down to about £2.20. Just under the £2.30 mark. So if I did have those funds ready, I could have allocated them to Aviva and hopefully gotten my share price down to closer to the £2.40 mark, without sort of breaking the bank and adding too big a position to it. So I'll definitely be keeping that in mind going forward. So Shell, I've increased my position with Shell from 26 shares to 29 shares. I managed to get my average share price down by 10 pence from £12.76 to £12.66. Now last week it was down by 0.94%. It's now up by 0.32%. But this is another one that dipped significantly at the closing of last week. I mean, it was actually down by about 10%. It was well below the £12 mark. As you can see here, it was down at 11.58. Now, I did buy at this point when it was quite cheap, although I do wish I'd managed to allocate more funds to it and drive that price down even more. But yeah, I will be adding to it in the future, the same with all the dividend stocks, and I do aim to buy them more during the dips rather than when they're sort of on their climbs. So BP, I've increased my position from 102 shares to 105 shares. The average share price has remained unchanged. So as you can see, it's up by 4.37%. Last week it was up by 2.95%. So the rebound of the oil, it certainly has begun. I mean, the turbulent times aren't behind us yet. There probably is a lot of potential for dips and then climbs. But as a whole, I would say it is recovering. Demand is going up, and the easing of the lockdown in many nations is certainly helping that demand. I'll definitely buy more shares in BP while the price is decent and that dividend yield is sky high. So I do wish I'd bought more last week. I think I'm going to be trying to buy some more BP this week in order to make up for it, because I did primarily focus on Shell rather than BP out of the UK dividend stocks in the oil sector last week. So the next one is Lloyds. I've increased my position in Lloyds from 753 shares to 825 shares. The price I managed to reduce by 0.1 pence, so not a lot, but certainly a start. Last week it was up by 0.79%, which was probably the best it had been doing. I mean, it's now down by 3.93%, and I really didn't expect it to be up at all for the foreseeable future. Certainly in it with Lloyd for the long haul, and because they do reflect the UK economy state well, I really wasn't thinking there would be any short-term gains, and I really am happy if they can just reinstate that dividend in the not too distant future. So yeah, this dip is of least concern. The pricing will do it what it wants essentially. I mean, it is of least concern. So the S&P 500, I've increased my position from 6 shares last week to 8 shares. The average prices actually went up because I had bought those 6 initial shares so early, and just hadn't added to it much since then. So the average prices went up from £20.89, £20.89 to £21.50. Last week it was up by 12.11%. It's now up by 12.26%, despite me buying the extra 2 shares at a higher price. So this is doing fantastically. I'm definitely going to be adding more to it in going forward. I think this week was certainly the start of the high allocation for the index funds for the S&P 500 and the FTSE 500. No, sorry, the FTSE 100. So I'll certainly be adding to them a lot more going forward as well, the Nasdaq 100 and potentially the FTSE 250 as well. So the FTSE 100, I've increased my position from 6 shares to 12 shares. My average price has remained roughly the same. Last week it was up by 0.04% and it's now up by 2.47%. So I certainly want to buy this a lot more while it's sort of in the sub £6 mark for this fund. There's certainly a lot more gain to come. The dividend, it hovers around 5%. So I mean, it's certainly a good investment at the time. Definitely in a good buy point at the moment. And I'll continue to invest in it going forward. So the next ones will be the US growth stocks. So Apple, Amazon, Alphabet, Microsoft, Facebook and Berkshire Hathaway. These all had £10 allocated to them, just spread amongst them. They're all doing relatively well, all up a few percent. I won't go too deep into them. I'll certainly be buying more going forward, and they are definitely going to be the primary stocks in my US growth stock portfolio. It's the next two I haven't added to the mining sector, although Rio Tinto and BHP are both doing very well. They've both had massive gains. They're appreciating well. They seem to be doing quite well despite the coronavirus. Mining in general does seem like it's sort of negating most of the negative effects. I was planning on buying a share of BHP last week. I wasn't planning on buying any Rio Tinto as it's quite an expensive share. I didn't buy one of BHP. I wish I did now. Although next week I'll definitely buy a BHP, although that could turn into a Rio Tinto if I want to up my allocation for the mining sector. We'll see how things go. But I certainly will be adding to them as we go forward. So the next two is Vodafone and BT. So for Vodafone, I've increased my position from 17 shares to 20 shares. The average price has went up from £1.13.1 to £1.14.4. Now, I mean, last week in the video that I made in episode 3 of the portfolio update, I really was on the fence about the telecommunications industry in general, which I have split between Vodafone and BT. Now, both companies had been in quite steep decline for the last sort of half a decade or so, at least their share price had been. Their dividends were fantastic, although I really wasn't sure how they were going to cope going forward. So there was a lot of uncertainty in my mind, for instance, about this both these stocks. The sentiment wasn't great. Some people think they're great and think they do have quite a bright future. Others look at the price and they say, how can you project that? So I mean, I was split between the two opposing sides. So I did take out a small position in each, and I thought I would see how they're doing, monitor the situation, and then sort of made a decision when I knew slightly more and the outlook was a little bit clearer. So Vodafone, they released their earnings and they did, their revenue was up, they were doing better than expected, and I do think that is partly to do with the coronavirus, the lockdown, broadband data, everybody's working remotely or they're staying at home, so I mean there is far more usage in the industry that Vodafone and BT operate in, so this has sort of been the catalyst. This rise in share price between Vodafone and BT has been the catalyst for me to sort of go full for it. I mean, have belief in their future and really decide to make telecommunications a vital part of my dividend portfolio. So last week it was down by 0.07%. It's now up by 10.14%. I'm certainly going to be buying more of this. I do think there's more gain to be had. I would like it to drop down a little bit, get me a better buy price again, so I'm not increasing my average share price too much. But no, I am feeling more confident. I'll certainly be buying more Vodafone going forward. So the same story with BT. I've increased my share from 18 shares to 20 shares. My average price has went up by 0.3 pence. So from £1 and 5 pence, 0.2, to £1.5, 0.5. So it has increased slightly. I'm still going to be buying more into BP. I think both BT and Vodafone are undervalued, but I would like to try and keep that average share price as low as possible. At the end of last week, it was up by 0.12%. It's now up by 3.84%. So again, it mirrors Vodafone performance. I will be buying more going forward. Definitely buying a more significant position in them next week. So the next two, Legal & General and Uber. These are the two new additions for this week. Legal & General, I've been talking about this for weeks and weeks and weeks on end. I've mentioned them in multiple videos. I just took out a small position. They got close to the price that I wanted. I did want to sort of get into them closer to the £1.80 mark, although certainly under the £1.90 mark. I'm going to be buying more shares. I think I'm probably going to buy between 10 and 20 shares this week. I do want to gradually increase the position so that it does sort of rival Aviva months down the line, because I would like my sort of insurance sector to be split between Aviva and Legal & General, because I mean they do operate in slightly different areas and they both have their pros and their cons. I mean the dividend growth potential for Legal & General is certainly higher than that of Aviva, although I do think they're both fantastic stocks to have, and I think it's definitely a good allocation to have, sort of to be in the insurance industry. So I mean it's went up by 4.05% as I've held it. I did buy it during that dip that I mentioned. I do think it's still going to go up in price, and I would like to buy some more shares before it goes too far up in price. So I certainly will be buying a lot more going forward. And so the final one is Uber. I mean, this is the newest addition to the US growth sort of grouping. Now, I mean, it's quite different from my other US growth stocks. The other ones are the sort of tried and tested blue chip tech stocks, and then Berkshire Hathaway as well, which is slightly different. But Uber, it is far more speculative than the other ones I've got in my portfolio. I mean, the financials are sound. I mean, the business model is sound. It just doesn't have that sort of credibility and that history to sort of show that it is a worthy investment and that the growth potential is there. Although I have been reading about how well Uber Eats, which is a service they do, has been doing, as well as the potential for Uber to purchase Grubhub, which is a competitor to Uber Eats. And I think in the current climate, they both could do really, really well. And I think Uber, therefore, could do well. So, I mean, It is slightly more risky, but definitely more speculative than the other US stocks I have in my portfolio. But I think I will be adding to Uber slowly, as I have been with the other US stocks. And I think probably there's a lot of potential for me to add other stocks that I'm speculating that I think they will do well. They haven't quite got that reputation yet, but I think that's certainly it is a very important part of investing, and the risk reward potential really is there. I mean, the risk's high, but so is the reward. To be a small part of your portfolio, I think it's definitely a smart move to make to have those speculative stocks on there too. So going forward, I'm definitely going to be focusing on the ETFs again, the S&P 500, the FTSE 100, the FTSE 250, and the Nasdaq 100. They will all gradually be coming to the forefront. The dividend stocks, they'll be being added to all the sectors. So you've got banking. I do want to add HSBC to accompany Lloyds with the banking, the UK banking industry. I've got the oil sector, which will be increasing probably substantially while they are quite low. Aviva is still going to be at the top for the foreseeable future, although Legal & General will be going to join that in the insurance sector. ETS will be going up significantly. All the US growth stocks will be having smaller allocations of sort of £10-15 each, I'd imagine. I'm definitely going to add to the mining stocks this week. Potentially BHP. I was going to add them last week. That's a small allocation. That's sort of only £15. If I'm feeling like a slightly higher allocation, I'll probably buy one share of Rio Tinto. Although we'll see. Vodafone and BT, I'd like to probably increase my shares by maybe 20 shares each or so. And we'll see how that goes. Then Legal & General, possibly increase that by a significant amount as well. Maybe by sort of 10-15 shares. Gradually get that level of the other UK dividend stocks that are at the top of the list. And Uber again, probably about £10. A small allocation, the same as all the other growth stocks for the United States. So going for next week, the possible additions that I'll be adding, I do think I'm probably going to take a position in Wetherspoons. Now for people in the UK, I'm not sure how popular this is UK-wide, although Wetherspoons in Scotland, it's certainly one of the sort of go-to places, especially among sort of younger people. Now I do imagine when lockdown ends, or potentially even if it just eases, depending on the terms of that easing, I do think it has the potential to sort of rebound quite quickly and really do quite well compared to some other UK stocks at the moment. And I think the price is fantastic. So I think I probably will be buying into Wetherspoons. Whether or not that will be next week, I'm not too sure. Carnival as well, they have a very, very good dividend. I certainly don't expect them to be paying dividends for the foreseeable future, but I think if they did rebound, the gains certainly are there. So again, I just discussed the risk reward. The same with Carnival. You're looking at about 300% gains on your capital, as well as a decent dividend if they sort of manage to weather the storm and you stick by them. So I think gradually I will be taking out a small position in Carnival. I'll maybe get it up to sort of like £100 or something. It's never going to be massive. And then I'll monitor them, and if they are improving, then I may well increase that position. But I'm going to take out one of them, I think. Possibly the same as Boeing as well. They've dropped significantly. Obviously, the airline industry is in havoc at the moment. I think Carnival probably will recover a little bit better than sort of the airline industry as well. I think cruising in general probably will, but I think they're both probably going to make an entrance in my portfolio at some point. HSBC, I would like to get one in them, a position in them. That's a sort of accompany Lloyds in my UK banking stocks, although HSBC a little bit more focused towards the world rather than the UK economy, which is always good for diversification. The FTSE 250 I'll be adding into this one. I'm not sure if that'll be next week, but definitely in the near future. I think house development, so Barratt, they have quite a good dividend at the moment, and I do think the potential's there. I'm possibly going to be looking into sort of real estate and sort of housing development, and possibly making that into another section or another industry of my UK dividend stocks, although I'll certainly be keeping an eye on it, and I'm not quite ready to bite the bullet quite yet until I research the topic a little bit more. So yeah, I think that's probably it. I mean, there's possibly some other ones that I might take a small position in, especially the US stocks with the advent of fractional shares. I mean, it's a lot easier for me to get positions into these stocks. It's the last thing to mention is the first dividend I received. So the first dividend is from Apple. I received it on the 14th of May, and it was 7p. Absolutely nothing. Very, very low dividend. Although I only own 0.17 shares of Apple. So it is nice. It's nice to sort of get that sort of that reward. You can see the light at the end of the tunnel, and the labour I've done sort of is bearing fruit, which it is nice to see. And I'm looking forward to getting my BP dividend, which I think is on the horizon, as well with the Shell dividend. So yeah, I think that's everything. So this video will be late. I think it will end up being uploaded on the Tuesday morning. However, I do certainly intend on doing it every weekend. It's just this week, I arrived home from working on the Saturday. Is usually the Friday. So I mean, I had far less time, and I do apologise for the slight delay. It would have been good to get a video done on the Friday, Saturday, the Sunday, so I could have actually showcased the sort of the miniature crash that happened. I was down by about £100, so the difference is significant, and I'm sure this is far less useful because it is made on a Monday and there is a bit of a rebound going on. Although I'll certainly take that to heart in the future, and I'll try and ensure that I stick to my schedule slightly better going forward. So I hope you enjoyed the episode, and I shall see you for episode 5 of the portfolio update this coming weekend. I hope you've been